Welcome to the Do Good X podcast. I'm Stephen Lewis, and I am a catalyst for positive change in communities and businesses. And for over 2 decades, I have inspired leaders and entrepreneurs to live and work on purpose with intention, faith, and a commitment to the well-being. And I'm joined by my co-host, Kimberly. It's good to see you.
Good to see you and be with you. I am Kimberly Danielle, a community builder, coach, and communication strategist who comes from generations of faith-driven leaders and entrepreneurs who believe that our purpose should drive us to contribute to the common good. And today we are closing out our special montage series, if you've been listening over the past several weeks. And this series has had a lot of topics, but today we are focusing on something that a lot of founders are curious about and sometimes conflicted with and challenged by, which is the topic of funding.
So in this episode, you'll hear from 3 voices in the field, 2 VC firm partners who break down venture capital in accessible ways, and a founder who not only raised money for his own venture, but he helped other entrepreneurs secure more than $50 million in funding.
These were all really great episodes.
Yeah, they were.
And together, just these snippets, they unpacked the big questions of how do you know if venture capital is the right fit for your specific business model? What does it actually mean to be VC ready? And if you are ready to raise, what strategies and tactics actually work?
So whether you are actively fundraising or just exploring your options, this mashup is full of insights and honest reflections to help you navigate the funding world with just a bit more clarity and confidence.
Now, if you are inspired by anything that you're hearing in this episode or the previous 3 episodes, be sure to go back and listen to the full episodes from last season, because again, this is only a snippet. But we hope you enjoy today's mashup and that you are inspired and gain clarity about your next steps. Today we have John Garry joining us. John is a partner at Garry Elevator, which provides early stage capital for companies whose products and platforms focus on infrastructure deployment, climate resilience, and community well-being. So thank you so much for joining us, John, today. I look forward to our conversation and the insights and wisdom that you get to share with us.
Well, thanks to you both for having me.
Can you break down what venture capital is and maybe give our listeners 3 key things they should know before deciding if it's the right path for their business?
Venture capital kind of covers all manner of sins, but ostensibly it's just outside funding for early stage ventures or early stage companies. There are a lot of different sources for early stage investment. Obviously, customers are a great one, but then also, CDFIs, et cetera. So all of this just to say that venture capital is one sleeve and a very specific sleeve of money that's available or should be available to early stage entrepreneurs. In that vein, I think that rather than 3 things for folks thinking about accepting venture capital, I would say 3 things for anybody accepting capital at all in your business. Like one thing I think about is your cap stack is your character, and the types of people and the type of money that you invite into your company early on, no matter what you tell yourself, is really going to influence the type of business you build, the type of entrepreneur you become, and the type of community that you're able to support around that. And so, at the risk of being pedantic, I think the first question is like, do I have a strategy? Do I understand the problem that I'm solving, the context, and the customer that I'm trying to help well enough to say, I'm going to choose this way and not the other way? And, I think most entrepreneurs who are aware of venture capital are already past that stage, but it's good to make sure that you feel strongly about the strategy, because the second question I would ask is like, is your capital provider aligned with that strategy? And oftentimes when it comes to venture capital, again, people will say a lot of things, but the fundamental answer is no. I think there are a lot of strategies that emphasize long-term relationship, building a kind of deep and multifaceted relationships with customers that are fundamentally at odds with the venture model, at least as most venture capitalists practice it today. So they're looking for incredibly fast growth. They're looking for capital efficient growth. They're looking for you to spend a certain amount of dollars and get multiples of those dollars back. And so again, you should be asking yourself, like, is this the type of strategy that my business is built to facilitate? One last point, because you asked for three, is my strategy like concept risk or is it working capital risk? I think a lot of entrepreneurs are asking themselves, if I spend $1 here, how do I at least get $1 back? That's already top 10% of entrepreneurs, period. You're breaking even. I think a lot of times people say, oh, this, like a restaurant isn't a good business, whatever isn't a good business. Most businesses aren't good businesses, and so I think just like breaking even is one type of thing. And that's where venture capital can help. Hey, we're exploring. The other side of this is it working capital risk? If I spend $1, how do I get $1.25 back? Or if I spend 50 cents, how do I get $1? Those types of efficiency questions are you just want to know what you're asking and make sure that your capital provider is aligned with that.
Can you suggest some resources that could help guide listeners through the different forms of capital and how to determine which might be the best fit for their business model?
Yeah, absolutely. I think we are in the early days of a real explosion of the types of funding sources that are available, particularly to early stage entrepreneurs. And I would say, if you're most interested or you feel like venture capital is most appropriate for your business, it's not a new recommendation, but Venture Deals by Brad Feld is a really good way to just make sure that you feel comfortable in conversations. The beautiful thing about venture is like it's an addition and subtraction game. Like if your balance sheet is complicated, something has gone wrong. And so just, having enough familiarity with terminology, it's all very simple concepts, but people add jargon to it to make it intimidating. And so Venture Deals can help kind of move past some of those early stage questions. I think in thinking through whether venture capital is appropriate for your business or not, Bryce Roberts at IndieVC has done some great work around the types of different startups that have a history within venture capital or outside of venture capital, and he's raising quite a bit of money to go pursue businesses for whom traditional venture capital is maybe not appropriate, but who have really high growth potential and who are kind of long-term oriented. I would say those two are maybe two good kind of like ecosystems, and a lot of resources can jump out of that. I think another area of exploration, and this is one I'm only beginning to understand better, is like cooperative and employee-owned types of work. And so, Nathan Schneider at Colorado has been for quite some time, been doing a lot of work about community capital formation and the types of structures in which, employees and ownership can share and build towards long-term company health. And so, three very different spheres in the early stage ecosystem, but I found them to be quite helpful in saying, okay, which one of these feels like me?
Today we have Rachel Wilson, and she brings over a decade of diverse global experience spanning multiple industries, many industries. Food and beverage, automotive, tech, healthcare, music, fashion, and media. She is managing partner of the BFM Fund and orchestrated the fund's operational and governance processes. The BFM Fund, if you haven't heard of them, is a seed stage venture fund focused on Black and innovative entrepreneurs. So I'm grateful that Rachel has taken the opportunity and time to join us. Thank you so much, Rachel.
Oh, thank you so much, Kimberly. Thank you so much, Stephen. I'm really honored and very blessed to be here today.
Can you share with listeners who might be early in the entrepreneurial journey, what is a seed stage venture, and what would make a business VC ready for the BFM fund?
Yes. So that's a very loaded question, Stephen. And so I don't have time today to go through the education of all things VC, but I'm going to break it down to hopefully give some context before I say like how the BFM fund looks at it. So when folks hear the word venture capital, it really is all about, do you have a business that has the ability to be innovative, has the ability to take over a particular market or be able to control a certain aspect of it, get some market share, and be able to exit in a certain time frame. So then that way all the folks that have put money into your business are able to get some type of return through a liquidity event. And when I say liquidity event, that essentially means a moment in time where your business is being sold, merged, purchased, um, going, taking a portion of whatever shares of equity that you have and being able to get some return on that investment. And essentially venture capital is a business in itself. It's people trying to find businesses that can flip themselves for a return of a minimum of 3x. And then there's a lot more that goes into that, but that's like at this very simplest level. How do venture capitalists find a company they can flip to get them a return of a certain amount so that they can pay themselves and most importantly pay their investors who believe that they can find amazing businesses to um, return capital to them. And so when you ask about the BFM fund, we are um, in the asset class of private equity, and under private equity sits venture capital. What we invest in is seed stage companies up to Series A. So meaning companies that have gotten to a certain level of revenue growth, they've gotten a good amount of market share, and now they're in need of larger amount of dollars, large amount of resources that can help them to maximize even more of the market that they're going after. And so for us, because we're investing specifically into Black founders that are looking for venture capital, we don't want all of them to fail. We want majority of them to have the ability to go through an exit. We don't want them to go through this process, get to a point of needing capital, can't raise that capital, and then we as a firm only focus on the few who seem to be able to return those dollars. Well, we want to do a lot of work in the beginning to allow for you to get to that exit point. It won't be everybody, but as much as we possibly can, have majority of the businesses exit. And so what that means for us is we're working a lot with private equity firms, roll-up firms. We're working with a lot of folks who look to be strategics or purchase or buy, or even people who are looking to do entrepreneurship through acquisition. And so we're working with a lot of those firms to understand, would this company, if they meet certain parameters, be a good purchase for you in your portfolio later on? So then that way, majority of our companies can have that exit opportunity.
What should entrepreneurs who are VC ready look for in a potential investor? Or maybe what's the advice, the one piece of advice that you would give them?
That was a great question because I am a true believer in that it's a two-way street when it comes to this investment process. Like, we're vetting you, but you should also be vetting us as well too, because we're going to be around and with you for a really long time. So you want to make sure you have the right type of partners as part of your cap table or your list of investors who are going to be along for your journey. Um, So I would say when you're looking for an investor, one, are they mission aligned is key. Um, I'm a faith driven person. I know Kimberly and I talked about this extensively when we talked and met. And so for me, if you are not aligned with um, doing good, if you're not aligned with, if you're only about like, how can I go after getting this money, um, not about how you can support the community, do things that are going to help uplift or change things for the better, then off the rip, that probably isn't the right type of partner that you need to have. At least for me, if I'm a founder and as a VC, when I look at founders, that's really important to me. So I would say, if anything, make sure that you end up with the right people who very much understand like what you're about, that they're aligned with your mission, they understand your passion, and they truly believe that you can do what you are gonna do.
I'm excited, Kimberly, for our guest today, who is none other than Devin Baptiste. He is a serial entrepreneur and an investor who is the co-founder and CEO of Group Raise, a marketplace for large group charitable bookings at restaurants, active in over 500 cities with more than 10,000 plus restaurant clients. He has raised venture capital and investment from investors such as Techstars Ventures, Magma Partners, Kapoor Capital, and various top tier angels. And as an advisor, Devin has translated the lessons that he has learned to help founders raise just over $50 million for their companies, and the vast majority of which have been underrepresented and emerging market founders getting their first and second checks. So, Devin, welcome.
Well, thank you guys so much for having me. It's an honor to be here.
You also have quite a track record with helping other founders to raise money for their business, and particularly underrepresented founders and those who are new to the market. What specific strategies or tactics have you found to be effective with helping these founders secure funding?
Yeah. Um, There's a lot of things, but I think at first it's just like I was really blessed to get some key insights. I try to, when I work with founders, find out where they are in their own set of belief and journey and build, and then give them some feedback and give them, in some cases, word for word tactics, in other cases, just like frameworks to get a different perspective on, people. The first thing I always start is that people won't give you money because you need it. That's a that's like the first principle. Like, yes, I know you need money. Just like nobody will date you because you're lonely. It's not a reason. It's like that may be your catalyst to go to the market, right? To find a partner. But that is like, we got to talk about a hobby. We got to talk about faith. We got to talk about some shared interest. We have to talk about how we form and co-create value. That is what gives you these enduring relationships, not your sense of lack. And so many, it's like, it's not as though you can't talk about that business is hard because you don't have money or what, but that's like something, you talk about with a co-founder or with a fellow entrepreneur. It's like, or if you're lonely, tell that to your friend. Don't tell that on your date, right? So just really like helping people sort, what are dating conversations that we can have with investors and capital providers, and what are emotional support conversations that we need to have with ecosystem players, co-founders, other players. And we cannot those worlds can't merge if you're going to go get capital, because I don't know, I always say is that like capitalism is, for better or for worse, the two core driving emotions behind capitalism are fear and greed, right? So individuals who are afraid on missing out an opportunity and see something that's going to be very large and want to participate, right? Those are the two underlying mechanisms. So anything else that doesn't drive that human emotion of greed or fear tends to not be a useful mechanism in capital allocation. There's a big difference between whether a business is good for you as a founder to run and operate, to fund your lifestyle and your needs, and whether your business is a product for an investor to be able to purchase, to see that in the future they're going to be able to make more money than they give you today, right? And so very simple ideas in the end, like once you get that, once you can really understand it and you're communicating why you as a founder and the company you're working on are the right individual and the right opportunity to, really reach a scale that is an attractive product, right, for investors.
Devin, this has been truly a wonderful conversation with you. I really appreciate it. You are definitely a wise colleague on the journey. And I think our listeners will benefit from so many jewels that you have dropped in our conversation today. So I just want to say thank you for taking time out of your schedule to be with us.
Yeah, thank you.
It's a joy. It's a pleasure. No, thanks for having me, guys. I hope it's helpful to at least one founder out there.
Spread the knowledge so we all might win.
Absolutely. Absolutely. So thank you for joining us today, and we look forward to you joining us again.
Thank you for listening to the Do Good X podcast. To continue the conversation or access our resources, visit www.dogoodx.org. Join us again for conversations that will nourish your soul, ignite your dreams, and empower you to build an impactful business, one intentional step at a time. Until then, keep striving, thriving, and doing good.